Hello and welcome to the July 14th edition of iTrust's Moneycast. It's our first video since the announcement of the annual budget by the Finance Minister on the 6th of July. And today we're going to be talking about how the rule change in fringe benefit taxes might reduce your take-home pay. FBT, or fringe benefit tax, was introduced in the year 2005-2006, and since that time, anytime a company was offering you as an employee any kind of fringe benefit, the company incurred a tax liability which they actually had to pay the government. Now, it's a different matter that that liability might have been passed on to you at a much lower rate of taxes of about 6 or 7%, but net, it was the company's liability. Well, this created a huge amount of administrative hassle for corporates, as well as it didn't really yield a lot of income or tax income for the government. So as of last Monday, the Finance Minister announced that he has abolished FBT. But that doesn't mean that the tax incidence has gone away. What this actually means is that the liability is now going to be placed into your hands as the employee. i.e., if there's a personal expenditure or liability of yours that you're being reimbursed by the company for, then you're going to be liable to pay taxes on that amount. And what this means is that you're going to have probably a lot lower take-home pay than what you had under the previous FBT rules. The new rules are going to come into effect retrospectively as of the 1st of April from earlier this year, and the details around all the guidelines on what could be treated as a benefit or a perquisite should be coming out in the coming few weeks, which you should basically consult with your HR and payroll department to identify which of these would be taxable versus which of these might not be taxable. So what is it that you should do as an employee so that your take-home pay is not reduced? Let's go back to the era when FBT did not exist, before 2005. At that point in time, very often your HR or your payroll and tax department might have been willing to accommodate your request to give you certain reimbursements for personal expenses but disguised as official expenditure. Really hard to say whether that kind of leniency or accommodation would occur in the current environment as well or not, but that's for you to ask your HR and your company to see if they're going to be willing to accommodate you. We're not advocating that, but that's potentially an option that one could go back to. The second thing that you could do is you could potentially talk to your HR department and ask them to make you economically whole for any kind of loss that you might have suffered as a result of your take-home pay going down, and that means increasing your CTC amount so that net of all the taxes, additional taxes that you might have to pay, you're not going to be any worse off. Now that again might be a little challenging for companies because that effectively means increasing your salary CTC, and the current economic environment, as we're still suffering from the global economic recession and so on, companies might not be willing to increase your salary. So the point that we're trying to drive, and you can look at the graphic as a part of the newsletter this week, is that there is a potential for your take-home pay to have come down, and please consult your HR or your tax department to see how it might impact you. Good luck.